The S&P market is completing its pullback today or tomorrow. Today's October 7th. It's not quite the end of the day. Market came down today. We are still extremely bullish, and we think that until the late part of October, the market is likely to continue higher. We expect that the beginning of the topping in October could be as early as the 20th. Now, there are several possible dates. The earliest one is October 20th, after which we could see it start to go down potentially, or it could have one more new high or retest around the 28th of October. And there is always a couple of day leeway, so it could be early November as well as the final of this particular third wave thing that's happening, okay? Then if we go down into Thanksgiving, somewhere between the 17th and the 20th, that could be a fourth wave and then a fifth wave of the fifth wave. And then a finale year-end rally that should take us up very close to the end of the year, which is standard when the fund managers realize they need to have some of the big flying names that they didn't buy all year. You know, they start buying window dressing at the end of the year. Oh, by the way, in this month's edition of Traders World magazine, there's an objective review of our market forecast mastery course by the editor of that magazine, and there's a link in the description below. So we are bullish, and we expect the market to continue higher. We're thinking the target for the year end potentially is 7,600. We believe that we're in the fifth wave of a rally, and probably we reconfigured what we think the Elliott wave count is. We think that we're in the third wave of the fifth wave. It's already started, and that this correction that happened today and may last until tomorrow, it is a two-wave on the way up in a third wave of that fifth wave. For the Elliott wave people, I think that makes sense. And basically, we should go significantly higher. The next resistance levels are approximately 7,000, 7,200, and then 7,600. Okay? Our matrix lines have been sitting there for some time, waiting for us to get there, and we do believe we're on our way up. I want to remind you that we primarily focus on intermediate and long-term forecasts. The short-term dates are likely to be plus or minus a few days. They are not that exact necessarily, and so if you're a day trader, you use them as kind of a general guide, but not to live and die by those dates. They can be wrong, okay? Our students, however, in our course group and our Discord group, many of them are day traders, and the techniques we teach are applicable to day trading as well, but I'm not doing videos every day, so I can't change the statements about the highs and lows, although many of them are easily forecastable if you use the tools on a shorter term basis, okay? We're looking at a number of cycles, just to review for those who care. We're looking at the overarching strength of the 60-year cycle, which has been repeating consistently, very accurately for 5 years now, as a general idea. And that goes up into the late part of October, early November. We're also looking at a 34.5-year cycle that's been repeating very well, and a 22-year cycle that's repeating very well. That's the big stuff. What we did is combine the three of them using one of the software products we have that adds the three together and averages them to get a potentially more complete picture than the 60-year by itself. And it turns out it calls for a high in November and a decline, and then another rally into March, where March comes out as the highest high. And that, of course, gives more time for this market to go higher. So if we don't reach 7,600 or higher soon, we still could do it next spring, okay? The other thing that's very interesting right now is, so we have the 49-week multiples, 4 times and 6 times that have been repeating. They call for a high in late October. We have a 356 trading day cycle, which we've mentioned only once or twice, and that rallies consistently. Multiple lows go up, and then they deviate, and they don't all agree what happens after. And the first date of resistance in time is the end of October. But the basic idea is market's still strong. We also mentioned the 17-month cycle, the 13-month cycle, the 8-month cycle, the 5-month cycle. All the short-term ones are up after a day or so from now. We're in good shape, and we should continue higher. I also wanted to mention there's a good kind of guideline that W.D. Gann came up with, which is if the market's in an uptrend, it will have pullbacks along the way. You look at the largest number of points that it's had on the pullbacks on the way up, and that is likely to be a reasonable trend indicator. In other words, you can use that as a trailing stop. In this market, for example, the S&P futures biggest pullback since September 2nd has been 135 points. So if it continues to be strong market until it breaks down with more than 135 point decline, there's a very good chance the trend is still up. We had one 85 point decline, another one 90 point. But the whole point is there's nothing big here. Until we get a big correction, the trend is likely very strongly up, and we're expecting it to accelerate. If our Elliott wave count is correct and we're in the third wave of the fifth wave, we should see a strong move up right away.